expecting Commerzbank and Deutsche Bank to possibly be the catalyst for some kind of wider cross-border bank consolidation. That's not happening. Does it put the consolidation in place, or are we going to see something else?
I think we have to see it over time. If Europe is to function properly, if it's to be real, this is perhaps the most important part of completing monetary union, is to have a proper banking union.
Who wants a proper banking union? Are we going to get it in time to actually spur banks to merge?
That's the question. You know, being a bank in Europe at the moment is tough. Scale is one of the answers, but it's not the only answer. You have to have the appropriate business model. But I do think that all countries should recognize that for their own respective banks, to be able to operate at scale across the entire European market would be a tremendous advantage, and would also allow shifting the focus away from being too exposed in the US and having more of a scaled up, huge market that you could tap into at the European level.
But this has to be cross-border, right? So do you have to do domestic champions first?
No, I don't think that the journey has to go via domestic champions. You have to first have an integrated European market, otherwise it doesn't work. Yeah. And then you have to obviously have players that have the sort of starting position to move into that market, and they will tend to be the biggest domestic players currently. But I don't think we need to think of it as first being a domestic champion in order to be a European champion. It's really just about being well positioned and having a market that is open, integrated, so you can operate at scale and make the investments that will be necessary. Will be very large. Think of retail banking, IT. These are going to be very large investments, so you need a market at scale to make that profitable.
Is it tougher? It seems like a lot of the banks actually want to be asset managers, but the asset managers will also have to merge.
Well, you would expect. I mean, I work for the world's largest asset manager, but in some ways it is surprising that we have not seen a genuine competitor in Europe that has the scale to compete with the global asset managers. So I think that would be part of the story. And if banking union, capital markets union in particular were to happen, you would certainly expect that over time you would see some consolidation as well in the asset management space.
But can a bank even compete with the US? I mean, you're talking about asset managers, but actually who can compete with the big US ones? And is it really regulation, or is it a lack of, is it negative rates? Is it a confluence of factors?
The yield curve is a particular challenge globally, but it's even more so a challenge in Europe. But I think the whole answer here for European banks should be over time to have a large European market that they can tap into, so they become less dependent on competing, particularly in the investment banking space, with the biggest US banks who are now so far ahead of the European banks that that's a very tough game to be in.
So we were looking at, Commerzbank's AGM is this week, Deutsche Bank's AGM. How do these two banks kind of get away from all the speculation that they're not merging and kind of reconnect with shareholders?
Well, first of all, these meetings are not going to be fun for the boards or the management, undoubtedly. Secondly, I think, again, the answer has to lie in finding an answer to the business model problem, which has been at the core of European banking, rather than just saying we need to get bigger. You need to have a view of what are you going to do with size. And again, in my mind, the answer can only be they need to push for the completion of banking union so that Europe can operate as an integrated financial market and they can operate at scale.